we see happening right now with China. And, so we give a 90-day hold or a 90-day reprieve on these tariffs. They're not tariffs. And I want to just comment on the tariffs for a minute. At first blush, you think, yeah, it is unfair. We pay tariffs and they don't. But is it really unfair? Because all of these countries that are, selling us their goods because we're a more wealthy, industrious nation, of course, you're going to have a trade imbalance here. The trade gap will look ugly on paper, but and sure, he wants better terms. Trump does, but the idea here is that these countries who we're buying their goods or they are selling us our goods, they're our creditor in the respect that they're keeping us afloat by buying our treasuries, and they're keeping us afloat by using our dollar as the global reserve, which keeps our interest rates low, which keeps our asset prices high, which keeps the goods that the consumers buy cheap. So sure, the trade gap doesn't look good, but is it fair that we impose these sanctions and we expect these countries to put proceeds into treasuries to support this lifestyle of ours and keep rates low and to use the dollar? And to that point, we are rattling perhaps the wrong saber or barking up the wrong tree. We talk a lot about Project Mbridge and how that got pulled away. Well, here it is again, rearing its head in a different manner. And they're not calling it Mbridge. Let me read something to you. The People's Bank of China, I read yesterday, has announced that its digital renminbi cross-border settlement system is now fully connected to 10 ASEAN countries. These are the countries in Southeast Asia. And 6 Middle Eastern nations. This development enables approximately 38% of global trade to bypass the traditional SWIFT system, which is predominantly used for transactions in the U.S., allowing these trades to be settled directly in digital RMB. And here's the thing. It highlights in practical terms China's digital currency bridge. This is the Mbridge, has significantly reduced cross-border payment processing times from a typical 3 to 5 days associated with SWIFT to approximately 7 seconds. For instance, a pilot transaction between Hong Kong and Abu Dhabi demonstrated that a company could pay a Middle Eastern supplier using digital RMB, eliminating the need for multiple intermediary banks and achieving a real-time settlement with a 98% reduction in handling fees. This advancement is part of China's broader strategy to internationalize the renminbi with initiatives like the Belt and Road, which we've talked about, and the challenge the dollar's dominance and U.S. dollar in global trade. So here you have it. You're pushing these countries into not only joining BRICS like Indonesia did, but to taking this technology and integrating it in with all of the countries that aren't even in BRICS yet. They're all coming together, including the Belt Road, which is 75% of human population and 50% of plus of global GDP. You have to wonder again, could this be intended? Is this what they're trying to do? Under the Biden administration, it was so stupid. It was too stupid to be stupid. That's why I thought it. But here, again, this is why, this is where conspiracy theories are born. Is he the Trojan horse or is he riding on it? I would vote for him again. I'm glad he's here. But I'm simply saying some of these moves, as provocative as they are, creating these consequences, does he not know that this will happen? And you're doing this now where you see China and South Korea and Japan get together to talk strategy because of the sanctions, because of the tariffs. And these are countries that aren't really allies. And at the same time, 2 of 3 of them are the biggest creditors to us in our treasury market. We're pushing all of these countries into alternatives, and it's happening in real time. I think it's a big deal. It's a huge deal. And all of this will be reflecting of higher rates as these countries dump treasuries and go a different direction. Instead of putting the excess reserves, as they always have, into treasuries to keep our rates low and support our debt binge, well, now they're putting it into gold, into other things. What is gold? But the only other tier 1 reserve asset next to treasuries, and it's doubled the performance over the last 25 years. And look at last year, it was up 40%. The treasury was up 4%. Easy decision, no counterparty risk. Same trend we're seeing happen right now. So anyways, these are times where there's so many balls and angles. It's like watching a pinball bounce around. It's hard to follow it and know where it's going next. But I think what's happening with the bond market is symptomatic and emblematic of bigger problems ahead. This is, again, thinking big picture. You unite and build the infrastructure between the Belt Road and all of these other nations that are aligned, geographically, with the BRICS and with Asia. It's a natural that you would see integration or trading permits, or, it's just geographically, if these countries, like all the Southeast Asian countries, had to choose sides between the United States or their neighbors, I have a hard time believing they'll choose the United States. And this is exactly what this is saying. So to me, this is the BRICS. It's an expansion of the BRICS. Even if we don't call it the BRICS, a lot of these countries are the ones who informally express interest in joining the BRICS. Some have formally. Look at Indonesia, is now a full member. There are a lot of these countries that I'm sure are saying, yeah, let's get the infrastructure set up and then we will join, so that it's a seamless transaction, so we don't get hurt by, the tariffs or by the sanctions or by a vindictive White House. So to me, it's kind of increasing the BRICS influence through the back door. Well, when people hear that the hedge funds are the ones doing this, and the Fed has even floated there's been talk of them bailing out the hedge funds. The positions are that big. Some people say, well, let them go down, let them suffer. But who's borrowing them the money to make these levered trades? That's right. That's the banks. And so when you talk about rates that are spiking, it could, in theory, blow up some of the biggest banks on the planet, let alone the brokerages. The great taking comes into play. This could have rippling effects through the insurance companies. Of course, rising yields are not healthy for the real estate market, for the stock market, for the bond market, for the banks, for the insurance companies. It's a very big deal. This is what happens when you create a reality for 3+ decades of suppressed interest rates and easy money, which creates distortions and misallocations of resource and capital. And the distortions in the asset prices are greatly distorted when the thought of yields rising above 5% sends massive shockwaves through the entire system. Well, what if they blew through that because everyone dumps simultaneously? This is the same thing that I talked about for years under the Biden administration. It was too stupid to be stupid. Well, what if this current administration actually agrees with that, thinks that we have to reset the system and it's better to do it by other countries dumping the dollar? We warned them, how can they do it to us? And well, here's what we're going to do to retaliate, blah, 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 rather than just the flat out reality of the fact that how the hell do we pay $28 trillion in treasuries that come due in 3 years with only $15 trillion in tax revenue? I mean, how do we continue to fund our military, a $1 trillion military budget this year that's all discretionary, in meaning we need to borrow money by selling bonds? Well, what if no one wants to buy our bonds? Well, that means that you have to see the Fed come in and buy them by printing money, which creates inflation, which, all roads lead to the same place. We're trapped. The Fed is trapped. And so I think that's, to average ma and pa, they're a long ways away from the hedge fund world, but the ramifications, the systemic nature of a system that actually contemplates bailing out these companies, because what it would do to the whole system is real. And a system that is as over leveraged and indebted as ours is very dangerous. You bring down one very large bank because of these decisions, the ramifications goes all the way out to middle America and mom and pop, and not just the big hedge funds and the banks on Wall Street. But it's crazy. You got Goldman Sachs, of course, in their private letters, not the ones sent out to the public, and no mention by the mainstream, saying that their low end prediction for gold at the end of the year is 35.50. That if they see more ETF inflows to the pandemic levels, 38.80 by year end, and it could get possibly near 4,500 an ounce by the end of 2025. That's coming from Goldman Sachs, and we don't hear any talk of this. We have gold at 3,300, and no one is talking about it. Again, it's invisible to the public. And so I don't know how it all plays out, but I'll tell you, I would say that we are far, far, far from the end of this game, because, as you know, the fact that gold is at these levels and the mainstream public is asleep, there's very little, if any, retail demand pushing the price higher. Yeah, there is our retail demand, but the mainstream has no idea. And so when you realize that this has been driven again by the big money, as we've often talked about, the hedge funds, the family offices, the sovereign wealth funds, and the central banks, and the average person is, again, missing this altogether. That's what's so special about silver. Look, silver's been held down, and I will, to the day I die, believe it's the military-industrial complex and their desire not only to make weapons. I mean, BlackRock owns all the weapon-making companies just about, and they're the custodian of GLD and SLV, and they pay for and make the bombs to blow up the countries and then win the contracts to rebuild the countries. It seems like a pretty sweet deal for them in terms of money. They needed to keep silver cheap in order to do it, but things around the world are breaking, whether it be deliveries into the COMEX, the deliveries out of the LBMA, which are breaking the system. China flying around the world and buying doré and concentrate as the second largest producer in the world. All of these things are saying that there's, silver is, in my opinion, the asymmetrical champion, risk reward, low downside, high upside. It is maybe the most undervalued, best bet of an asset class on the planet. And yeah, it's easy for me to say it as a guy that owns a gold company. I'm tired of even defending that. If you don't see that for what it is, you're not paying close attention. And yes, it's enough to make you pull your hair out of your head, but it will catch up and perform similar to gold, only I believe at a much higher clip in terms of percentage gain. So for me, silver is still the preeminent value. And even if you buy silver with the intention of someday converting it to gold, all it does is fall back to its 150, 200-year average of mid-40s to 1. It's a double. So, if you could buy 10 ounces of gold today, you put the equivalent into silver. And when the ratio corrects just to its average price of nearly 2 centuries, you're still 6 to 7 times off of what it's coming out of the ground at that price. I mean, that's a long way from where it should be. It's a double plus. So, yeah, I think it's an opportunity we don't see very often.